Hi, thanks for joining me in my market report. My name is Mike, and my market report is on mortgage rates. We kind of like to get into what impacts mortgage rates on a daily basis. So, obviously, based on that, we do these every single day, Monday through Friday, unless there's a holiday when the markets are closed. However, we kind of like to provide you the information, whether if it's economic data, whether if it's headline news or sentiment in the market, to kind of give you a gauge as to what's impacting those rates on any given day here, and kind of look at what the week is ahead in terms of planning ahead for if you're in the market for refinance or a purchase. So you're maybe keeping your eyes open on mortgage rates. So you might want to see if rates are going up or down, or if you should lock in. Hopefully these videos will help you out to determine if you should lock or float, or if you should just or play it safe and just go ahead and lock in. So, anyways, just give you an idea of what goes into these mortgage rates, because they do. So when you're driving on the freeway, you see those signs. All these rates are being advertised. Well, they may not be what actual rate is for that day, primarily because again they do change on a. They can change as much as 2 or 3 times in a day on a volatile day here. But for the most part, they may change about an eighth percent any given day, or depending on the volatility of the market. So that's why these reports here, these videos, can be very useful for you, especially during these times. Anyways, a little bit about myself is I'm a loan officer. I do work with a national lender. You're free to, so please feel free to reach out to us anytime if you got questions in regards to mortgage rates, you got questions about mortgage programs or the process. We're here to help you. We are being a national bank. We can lend in all 50 states. We got some great programs out there, loan programs out there, some great rates and great, even some niche ones. We just came out with the recent physician loan. So that's pretty interesting. So if you are new to the industry as a physician or dentist or vet or what have you, a medical researcher even, we have a loan that might be of use for you if you're looking to buy. It's mostly for purchases. So, anyways, reach out and we can talk a little bit about that later. But without further ado, we'll jump right into this. We don't have anything economic data really today. We had a rollover, which we'll see that in our mortgage-backed securities. So the chart might look a little weird, but I'll kind of explain that once we get to that. To look ahead here, we we don't got a lot of data being reported this week. However, we do got some important data being released. So tomorrow we'll get the CPI report, which is the Consumer Price Index, which measures inflation on the consumer level. This will be important to watch as we've been dealing with the so-called transitory inflation. So we want to see, lately we've been seeing some inflation pulling back a little bit. So we'll want to see if this continues that or not, if it's going to start subsiding a little bit. We also got on Thursday the retail sales, so that will be also an important data to watch as well. We saw a pretty big drop off from the last month compared to the previous month when Amazon had their big sale when they moved it up. So the last report didn't come in very well. Let's take a look ahead at the headline news, and right now stocks are a little mixed. Nasdaq's about the only one in negative territory, and then when you look at this investor survey by Deutsche Bank, it kind of gives us a gauge as to what to watch out for, and I'm going to kind of read off what it said here from MarketWatch. It said an investor survey conducted by Deutsche Bank found more than two-thirds expecting at least a 5% decline in stocks by end of the year. The same survey found the biggest risks to the market are new variants that bypass vaccines and higher than expected inflation or bond yields. So those are things we're going to have to watch out. So the data looking forward, we're going to want make sure we watch for those to see if it meets the concerns of the investors out there as they kind of make up the bulk of the who's buying stocks out there, and then of course bonds as well, which is mortgage-backed securities, therefore affecting mortgage rates. So let's take a look here at the mortgage rates. So as I mentioned, we are up 8 basis points currently. We're just below the 25-day moving average. We were up here, and that's why I was talking about the rollover. What that rollover means is that every approximately 30 days, we have a reset. So as I mentioned, mortgage-backed securities are sold on Wall Street. So after 30 days, they package it, sell it to Wall Street. We have a reset in pricing, but it doesn't affect the interest rate. So in this case, we had a reset in pricing, came down here, but we're up for the day so far. And right now, rates are about unchanged from when we left off on Friday. We potentially could, but we'll have to wait and see if this 25-day moving average will allow us to break above it. As you saw, we were a little bit higher, touching off the 50-day moving average and subsided a bit. So we'll wait and see if we can break above that. But tomorrow could be a day, or it could push us lower because, again, it is inflation data, and that is the enemy for bonds, which is mortgage-backed securities. So with that in mind, be careful looking forward. We've got some data coming up. With the data coming up next week is the Fed meeting, FOMC. So that's something else we got to watch out for. So we may see a pullback on some of this data here, or at least on the on this, until we get the meet these catalysts and see what kind of news. So you may get they may brace for worse news, and so that means they may pull back a little bit. So we got to be careful from those two points where we have the CPI coming in tomorrow. We got the retail sales, but we also got next week FOMC. So investors may look ahead and pull their trades ahead of time before and brace for what the news comes out. Because initially they thought with the poor jobs data, they may not start tapering until next year. However, you get a few Fed members mentioning that they are on pace to taper this year. So, so we got some conflicting, and we won't really know until we get the announcement from Fed Chair Powell. So. Let's look at yields. We're sitting just under 1.33 right now at 1.326. So again, mortgage rates unchanged. We had a rate set, and hopefully that will answer questions. If you guys like these videos, please smash that like button. And again, we're here. If you guys got questions or anything we can help you guys out with, please reach out. We are here for your assistance. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you in tomorrow's video. Bye-bye.